Hi there, welcome to Market Call. Kim Bolton is our guest today. He's president and portfolio manager at Black Swan Dexteritas, and he'll take your questions on technology stocks. Call us toll free, 1-855-326-6266, or email us marketcall@bnmbloomberg.ca. Kim, thanks for joining us.
Happy Groundhog Day there, Andrew.
Thank you very much. Can we talk about Google? Because I'm looking at the Class C stock hitting a new record high briefly today, just above $3,000.40. It has dropped a little from that, but investors apparently welcoming those results, but also perhaps the news of the 20-for-1 stock split.
Yeah, you know, the stock split is going to take a little while because it has to be approved by the shareholder meeting. Which isn't until July. So it's going to take a while, but, you know, it's going to give a great opportunity for wider distribution of their shares. And certainly the volumes will go up, not just because of the lower value, but it's going to make it more accessible for options. So volumes are going to go up a lot.
Well, you said for options. How does that work?
Well, just the lower price will actually encourage, you know, a lower strike price will just facilitate more volume when it comes to the option community. And you know, last year, Andrew, there were more stock options traded than actually stocks. So it's a big deal.
Oh, it's kind of like the virtual world taking over the real world in a way. How are you feeling about tech right now? Fascinating, isn't it? We've had this incredible invention of how to work outside the office over the past 2 years. Some people are returning, but the long-lasting effects on technology and the way we use it have yet to be seen.
Absolutely. You know, the digitalization of everything is just accelerated, multifold. But, you know, things are different now. You know, that's probably an old saying, but it is different, right? You know, now we're in an environment of like the perfect storm of rising interest rates, shrinking liquidity, escalating inflation. You got supply chain constraints. And on top of that, you know, a lot of stocks are rich, especially the ones that are more leveraged and are not as profitable or unprofitable. And so, you know, you bring all that together. On the other side of the coin, you know, earnings are still pretty good. Mm-hmm. But, you know, that's as long as growth hangs in there. You know, the Atlanta Fed came out yesterday, and they're predicting that Q1 GDP growth in the U.S. is only going to be 0.1. So, you know, the whole Omicron is really starting to slow the growth. And so it's going to be rough waters. You know, rough waters, it's just going to be volatile, which really plays into the active manager's hands.
We will leave it there, and we'll get some ideas from Kim Bolton today on tech stocks. 1-855-326-6266 is the number to call with your questions. We'll be right back. Kim Bolton is taking your questions on tech stocks today. We have an email from Neil in Cambridge, Ontario. Neil wants to know about open text. What do you think?
Well, we definitely follow it. We don't have it in the fund or any of the separately managed accounts, but we do follow it. So right now, I do believe it's trading just shy of $48.
You're talking U.S. there, I imagine. We're looking at the, sorry.
Oh, yeah, sorry.
Okay, carry on. Yep.
Yeah. So OpenText, just for those just sort of wondering about it. So what OpenText does is that they develop and sell what's called enterprise information management software, which basically, helps companies digitalize the processes and supply chains through various sort of data analytics and artificial intelligence, just to help them make better decision making. So currently, just shy of 48 US, we actually have a price target of 61.75 US. So you could buy it here, buy it a couple of dollars lower, around 45, and then around 43, but use a stop down there of about $40. Just lastly. Gartner Research, which is the world's largest technology research company, not just for the invest side, but for actually end users. They actually named OpenText as being a leader in its content services platform. So they are a quality firm. We just don't have room for it in our portfolio.
Oh, okay, just don't have room. You've got too many. You're spoiled for choice these days. Angela in Cranbrook, BC, sent an email, wants to know about Taiwan Semiconductor. Angela reckons it's done nothing, whereas other semis have gone gangbusters. I haven't checked that out, but is that the case? And what do you think of Taiwan Semi?
Yeah, it's true. So this is the granddaddy of the foundries when it comes to semiconductor foundries. They have a 51% market share in semiconductor foundries. So they're just the biggest one around. But more recent, they've always spent a lot of money on CapEx and building out their foundries. But they've recently announced, and they're going to keep on spending an exorbitant amount. What is it? $125 billion over the next 3 to 4 years. And the reason for that, you may have heard of one of these companies, a Dutch-German company, ASML. They're the ones that do that ultraviolet lithography machinery. That actually helps produce these lower nanometer type semi chips. Each one of those things costs around $75 million, and they have about 80 of these. There's only about 120 around the world. So they just spent an exorbitant amount of money, and so we own it. But we look for this as a long-term, sort of medium long-term hold. In other words, all this capital expenditure will unlock and produce value over the next 2, 3, 4 years. So yes, Angela, it's sort of gone sideways because as much money as they make, they're spending it on the future. Now, just lastly, there are a few risks in this because it's Taiwan, and there's always this saber rattling about China, and also, Taiwan Semiconductor has a few foundries over in China, so there is that sort of China risk, which is a bit of an outlier, but people always mention it. So we actually have a 12-month, currently trading at about $122, and we got a 12-month price target of 151.
Okay. Thanks for that question. We've got Rob in North Battleford, Saskatchewan on the line. Go ahead, Rob.
Hi, Kim. I was just wondering if I could get your opinion on Upstart Holdings.
Upstart. Oh, what are they, Kim? Just remind us what Upstart is.
Upstart, they really came out and sort of revolutionized the data analytical solutions for the banking side. And Upstart provides these analytical tools to assess borrowers' credit worthiness. They just have a very, very deep data bank and library. And they use their artificial intelligence tools. And so they don't take much of this on their own books of these loans, but they offer this software to people and to banks out there and credit unions to actually assess the creditworthiness of various enterprises and individuals. And so it's become extremely popular. It was really, really popular, and it sort of took off when it first came out. And if you look at the charts now, it's actually come back down to earth, currently trading at about $105, but we have a 12-month price target of $148. We've been sort of in and out of Upstart over a while. You have to be very, very nimble, and you know, perhaps if you're looking to actually buy it, Rob, I'd actually use the options market and maybe buy a call, because then you know exactly how much you have at risk in the market, rather than just sort of buying the stock and hoping that it's going to go up.
Let's squeeze in another caller. Andre in Chilliwack, BC. Go ahead, please.
Yeah, good morning, Andrew. Thanks for taking the call.
Pleasure.
Mr. Kim Bolton, can I get your comments, please, on Apple? As you know, it's reported last week. It smashed the quarter. All their verticals are up significantly. Could I get a price target at 12 months on Apple, please? Thank you. Have a good day.
You too. Thanks.
Yeah. So I'll have to do this one from memory. The great quarter. And right, they smashed it on everything except for the iPad. Currently trading at about 174, Andy.
Yep.
We actually have a 12-month price target of $179. So yes, we own it. And what we're doing is we're actually writing some calls, because it's so close to the price target. And so we write some calls up around, 178, 179. That's where we want to take profit, and you make a little bit of income, and you give it a little bit of protection. But you can see this coming across from all the big mega cap tech stocks, that they have such a far reach, tremendous cash flow, and they can weather the storm of what I originally talked about in the beginning of, rising inflation, rising interest rates. And, they have the moat, and they have the capability to actually weather the storms. Whereas, some of the smaller software companies are really affected when it comes to the pricings, the PE multiples, and the price targets that have actually come down closer to earth here. So it's Apple, yes, great own, but it's got a pretty short runway from this stage. That's our belief.
Kim Bolton, taking your questions on tech stocks. We'll be right back. The number to call, 1-855-326-6266. Another caller in Chilliwack, BC. Benjamin, go ahead, please.
Thank you, Andy, and hello to you too. Kim, I'd like to get your thoughts on PayPal. I've got a small position at the moment. I've been thinking about adding to it. It looks like right now might be a good opportunity, but I just want to be sure I'm not catching, could be a falling knife. I'm not sure, but I just wanted to get your thoughts on PayPal at these levels. Thank you very much.
Thank you.
Thanks, Benjamin. Well, it's a very topical one these days, isn't it? It was only 6 months ago, north of 300 US, and here we are sitting at, holy smokes, 131. It's off 25.5% today. After reporting last night, the Q4 was actually good. It was, beat on the top, beat on the bottom. The problem was the guidance, and it sort of rolls back to the whole eBay thing. eBay said that they didn't want PayPal anymore. They were going to do their own payment system. And, remember back, they were going to buy Pinterest, but then they walked away from that. So, Benjamin, we have a small position. We have about... Well, at the beginning of yesterday, it was probably a little bit more than 1%, but we've got a little less than 1%, and we're trying to decide what to do. And maybe in the same position as you, Benjamin, I don't like buying things that are going down. And so we're just going to sort of hold tight. It's interesting, though, Benjamin, if you look around at all the, the big investment houses out there, they've all come out today and put it as at least a buy, if not an overweight or an outperform, all the way from BMO to RBC to JP Morgan, B of A, and so on. So, and mind you, the price targets have moved down from, if you go back a month ago, it was around 280, but now sort of the average price target out there is around $185 to $190. Right now sitting, at $131. So, play at your own risk. I'm not buying it. I'm not selling it. I'd like to have it settle. And still, Benjamin, it's a massive company. It's $165 billion company. It's one of the biggest fintech companies out there. So it's not going away.
We have Jeff calling from Halliburton, Ontario. Go ahead, Jeff.
Good afternoon, gentlemen. Thanks for taking my call,
Pleasure.
Kim and Andy. My question is on Roblox. I took a position back in 21. I'm down about 34%. I was wondering, Kim, what you thought of this stock and whether it's potential takeout. My concern is that it might get taken out at being underwater here. Look forward to your sage advice, Kim. Thank you very much.
So Halliburton, an energy tech company.
Cottage country.
So, Roblox.
Oh, I'm sorry. I got mixed up there. I'm sorry. Roblox. I beg your pardon. I was losing the plot there. Roblox. Carry on.
So, we don't own it right now, but we're looking at it very, very carefully because it seems to have sort of, caught a bit of a bid over the last couple of weeks. Mm-hmm. But, it got all the way up to $141, and right now trading down at 67. It's been down all the way to about 54 a couple of weeks ago. So Roblox is a pure play when it comes to the metaverse. And what it allows, it allows people to actually develop their own games. Mm-hmm. And it's such an easy platform to use. And if you talk to the kids, kids just love it because it is easy to use, and you can develop your own games and so on. The other one that we sort of like in this space is that Unity software. However, one of the problems is that Roblox and Unity software, they're not profitable. And in this environment of rising interest rates, slashing the PEs, bringing the price targets down, you just gotta be very, very nimble. And I hate giving any sort of 12-month price targets on this because a lot of these companies, they're trades, they're not investments. But, it looks trading right now, around $67. It should go back toward just north of $100. Mm-hmm. And it could happen, pretty quickly. But I don't think you'd see it go much above, certainly above 110. It's not going back to that 140 level. I hope that helps.
Can you really create video games without too much programming knowledge?
Well, Andy, it may be a little difficult for you and I, but for kids that don't sort of carry a lot of baggage around, they love it. Uh-huh. And the Roblox is more for the beginner and the intermediate. Unity software is more for the the intermediate and more advanced sort of developers out there.
Amazing stuff. Yeah.
Yeah, it's very cool.
Yeah, I wonder as programming gets better, maybe those of us who aren't programmers can just create stuff without having to learn all the mechanics. Ram in Calgary, go ahead, please.
Could I please get your opinion about Absolute Software, ABS in Toronto. It's stuck at the bottom of its price range. Like, is it worth taking a gamble on this one? Absolute Software, please.
Thank you.
And actually, that was, sorry, I'm just trying to find it here. Absolute Software was one of those companies. So what? Do it from memory. That Absolute Software is more involved in the supply chain, the software that actually helps people on the supply chain side of things, and
security, I think, is their big gig as well.
Yeah,
endpoint security. Okay. Carry on. Sorry.
And they're a Vancouver company. It's an interesting company because back in May of last year, the beginning of the summer, they ended up buying a company called NetMotion, and it was a big ticket for them. It was $340 million, and Andy, that is exactly where the security side came from, because NetMotion actually allows users to transition sort of from traditional secure remote access technologies to like a zero trust, and there's lots sort of behind it. But since then, they've been showing some losses, and so it was a big ticket for them. They're still digesting it. Currently trading at about $10.25 Canadian, and we have a 12-month price target of $13.32. Now, we don't own it. It's got a market cap of just over $500 million, which is a big deal in Canada, but it's just not big enough for us to actually put into the portfolio. Mind, it could go into some of our separately managed accounts. Awesome company, great future ahead of it.
After this, we'll have a look at Kim Bolton's past picks. We'll see how he got on with Qualcomm, which has a lock on technology in the cell phone industry. Kim was on our show January 21st of last year. Your first idea was Accenture, the giant consulting company, and of course a big part of their mandate is helping companies implement technology, IT. Nice gain on the stock.
Yeah, and we actually took some profit, and we're actually trying to find some space, and maybe you'll find the space when we finally sell out the PayPal. But Accenture, this is the leading IT consulting outsourcing powerhouse out there. And it's focused on cloud integration, and companies bring them in to actually help them work through the project management of installing cloud integration and all the software stack on top of it. Accenture's client base is massive. They got 75% of the Fortune Global 500, 97 of the top 100 S&P companies. And it's actually got a yield on it of 1.4%. So right now trading around $353 US. We have a price target of $416. So it has a decent runway ahead of it. But I think you can buy it here around $353. Maybe add another third down around $335, and then a final third down around $315 to $320. But then use a stop down. If it breaks through 300, then something's nasty has happened out there.
Okay, Qualcomm, huge patent holder in the cell phone industry.
Yeah, and their report tonight, Andy. So right now trading at 175-ish. We have a 12-month price target of 209. And I mentioned those price targets because, gosh, these days, a lot of these price targets are achieved in advance of 12 months. But anyway, Qualcomm, what they do is they create intellectual property, semiconductors, software, and services related to wireless technology, smartphones. So they are the king of the CPUs, and they compete with the NVIDIAs out there on the graphic processing units. Now, they're what are called a fabless chip maker. In other words, they outsource the manufacturing of the silicon to foundries out there. They're making great hay when it comes to the 5G side. They have a relatively recent acquisition in a company called Nuvia, which was really helped them scale up the move into more into the current lines of the smartphones and the Windows PC and so on. So currently trading at about 175. You can buy a third here, another third down at around 165, and then 155, and use a stop of 145 with a price target of sort of 209.
And then finally, your final idea was C3.ai. Kind of a klutzy name. What do they do? Stock suffering, down 80%.
Yeah. And it's actually come back. It was down almost 85%. Mm-hmm. Last January 21st, we recommended it. We actually bought it the day before. We bought it at $125. We had a 12-month price target of $147. So there we are. We buy it on January 20th, 2021. 5 days later on January 25th, it broke through 147. So we took our profit. We watched it go all the way up to 177 by mid-February. We left some money on the table, but it's become very sort of erratic. Technically, the price action is not very good, so we just haven't weighed back in. So what they do is that there are really two sort of big pure plays when it comes to artificial intelligence out there. It's C3.ai and Palantir. We've actually weighed in more so on the Palantir, although that one is a bit volatile, but certainly not as volatile as C3.ai. Now, so if you do have an interest in here, sort of the average 12-month price target of all the analysts that cover C3.ai is $31.50, but we wouldn't particularly recommend it.
Okay. Thank you very much, Kim. Great first half. We're going to be back with more answers to your questions on tech stocks. 1-855-326-6266. We have a caller from New Brunswick. Andy, go ahead, please.
Good afternoon, gentlemen, and thanks for taking my call.
Pleasure.
My question is on Converge Technology. Just wondering what Kim thought of it as a longer-term potential and what your 12-month price target might be. Thanks. I'll hang up and listen to your answer.
Thanks.
Thanks very much. It's... this is a great Canadian story. And it very much reminds me of sort of how Constellation Software, which we'll talk about later, has sort of built their business. So what Converge Technology Solutions does is that they build up a portfolio of IT service providers. And then that portfolio allows them to go out to clients and offer sort of multi-vendor technology solutions. Now they're offering their solutions sort of come in two forms. One form sort of like a blockchain structure for data center infrastructure, and then also IT spend solutions for analytical and cloud delivery. You know, it's a big company. It's a $2.2 billion company. So great Canadian story. We don't own it. We watch it very, very carefully. We don't own it right now. And it's got, you know, it's got about a 20% upside here, 12-month upside. Currently trading at about $10, just over $10, and it's got a us together with the other analysts, the average 12-month price target on Converge is $12.32.
Okay, we have Chris calling from Calgary. Go ahead, Chris, please.
Oh, good afternoon. Thanks for taking my call.
Pleasure.
Just want to get your opinion on Microsoft. Thank you.
Thank you.
Well, as everyone knows, they reported last week, and they just had a fantastic quarter. You know, the fact that you could actually pick it up, you know, under $290, and right now it's trading over $310, $311. So, and you know, the average 12-month price target on this is $383. So it's still got a very, very good runway in front of it. So many things you could talk about it, but what I would recommend is, you know, if you own it, hold on to it. I'd add to it. We added to it down at $295. We wanted to add to it down at $280, but we didn't get it. And so, you know, they've just increased their, you know, total addressable market with this recent acquisition of Activision Blizzard. Sort of knew that Activision Blizzard was going to be bought by someone, but you know, Microsoft is the perfect one out there. You know, and I think bringing that into the fold at Microsoft is just going to be an excellent position for all of those popular game franchises of Call of Duty and World of Warcraft and Diablo and Candy Crush and so on and so on. But you know, on top of that, they have all the revenues that come from the cloud side, the Azure. They have the productivity and business processing side, which is all about, you know, the Office 365. They got a security side. Mm-hmm. So it's just a core holding in a technology portfolio. Now you can trim it here and there, but it should always be part of a core holding in a technology portfolio.
Gulam is on the line from Toronto. Go ahead, Gulam.
Hey, good afternoon, gentlemen.
Hi there.
I have a very small position in ZQQ and SOXX. I was thinking of adding to my ZQQ or going to Teladoc. Do you have any preferences for any one of the three, or you have an alternative? I'd appreciate your comments. Thank you.
So ZQQ is an ETF that tracks the NASDAQ 100 hedged to Canadian dollars. And SOXX is the semiconductor ETF. Carry on.
Yeah. And then Gulam, you mentioned also Teladoc. So we're sort of in various places around the technology arena. You know, when it comes to the triple Q and the one that's actually hedged on the Canadian dollar, or even into the SOXX, I'll be honest, I have no idea where the market is going to be in the next month, the next quarter, or this year. All I know is there's going to be a heck of a lot of volatility. So it's less of an investing environment and more of a trading. You have to be very, very nimble and very active management on it. So that's what I would suggest when it comes to those ETFs. Now, mind you, the SOXX, which is, you know, sort of the granddaddy out there of the semi ETFs, it actually charts very well. And, you know, the semiconductor side is sort of the Dow Transport Index of modern day, right? And so it's a great place that you should always be watching. Finally, with Teladoc, we were in that a year ago, and we just sort of backed away from the healthcare. You know, even the telehealth side has had a difficult side, as you know. Also, the healthcare and the biotech side. So we've just sort of backed away from that.
We're going to be back with Kim Bolton of Black Swan Dexteritas. Tech stocks are on the menu. 1-855-326-6266. Dave is on the line from Toronto. Go ahead, Dave.
Good afternoon, gentlemen. Kim, a three-part question. Your thoughts on the cyberspace sector in general. And if you're keen on it, would you go towards a pure play or a more generalist operation? And last but not least, Palo Alto Networks, which I've been eyeballing for far too long and have yet to pull the trigger. Appreciate your thoughts.
Thank you.
Thanks, Dave. Okay, and I got to do this quick. Cybersecurity. You know, if we've said coming into this year that really there are sort of three sort of main technology themes and trends: cybersecurity, metaverse, and continued migration into the cloud. So Dave, you're right on it with the cybersecurity side. It's interesting because, you know, here we are 2 years into the pandemic. You know, the big companies have actually sort of pieced together a very, very true, great cybersecurity strategy and sort of taken different pieces of remote and endpoint and so on, and building up a portfolio of cybersecurity vendors. However, Dave, you mentioned Palo Alto. I think Palo Alto is the place to be because I know, according to Gartner research, when small and medium-sized companies come to them and say, listen, I can't piece together all these different parts of a cybersecurity strategy, which one should I go to? And Palo Alto is the one that they always recommend. So I would actually agree with you. And let me tell you just quickly, Dave, currently trading at about 509. We have a 12-month price target of 595.
Okay. Sorry, how much was that? 1295, 1,295? No. Sorry.
No, currently trading at 509.
Okay.
For Palo Alto, and we have a 12-month price target of $595.65.
Okay, 595. Okay. Whoa. Show is flying past. On a programming note, let's check in with John Ehrlichman to see what's coming up on Bloomberg Markets.
Nice to see you, Andy. Yeah, Palo Alto, a popular name on Wall Street still. About 90% of the analysts have a buy rating on that one. What about the price for oil? Where is that headed? We're going to get some good perspective. Andy, you were talking about it already today. Yes, you got OPEC and allies that are looking to produce more, but there's still going to be quite a supply-demand crunch, and we're going to dig into that with Halima Croft, longtime energy watcher. And on that big theme of technology, which you guys have been talking about today on Market Call, after looking at that mighty Alphabet report last night, we're getting ready for the mighty Meta, formerly known as Facebook, which will be reporting its results, and we'll get some good perspective from Social Flow's Jim Anderson. So that's all coming up at the top of the hour.
Thank you very much, John. John Ehrlichman with a preview there of Bloomberg Markets. Let's take a break. We'll have a look at Kim Bolton's top picks after this. let's get to those ideas. And Kim, remind us, your first stock, TXN on the NASDAQ. What stock is that?
That's Texas Instruments.
Okay.
It's a massive company. It's a $166 billion company. But it always flies under the radar, compared to, the big mega cap tech stocks. However, I always look at Texas Instruments as, it's just one of those attractive perpetual compounders. It features optimal combination of, financial safety, high return on capital employed, and really an enviable capital allocation flexibility. So they're just a very, very sound company. So what they do is Texas Instruments is really the king of the analog and also the embedded processing. So the analog chips, so they produce these analog chips, which are different from the digital or the memory side, right? They're just there for sort of processing. So they go in fridges and dryers and so on, into batteries. But then they also have this embedded processing business unit, which is all about microcontrollers, which also go into various electrical equipments. It's not as sexy as sort of the NAND and the DRAM, all the memory chips, but those analog and processing microcontrollers are in absolutely everything, and that's why they have such tremendous cash flow. So currently trading, what about $179.50, and there's a 12-month price target of $214. Can talk a lot about. They just recently they reported last week. Phenomenal company.
Kim, we're so tight for time, and I'm so sorry to cut you off. Shopify is your next idea.
Yeah, Shopify. So I've got two here that I'm going to talk about, and they're Canadian, and I often don't talk about it. Okay. Shopify, and it's actually on sale today, which means that someone out there has been doing this morning quite a bit because it's down 10%. And what we've seen is just a lot of option activity on it. So Shopify, everyone knows it. It's the big e-commerce as a service company out there. Well managed, great cash flow. Yes, there was a lot of concern about the new fulfillment center strategy, but they came out and they explained it very well. They recently came out about tying up that relationship with Coinbase, so everything is running well on not only on their e-commerce as a service, but also on their fulfillment and also their shop pay. So currently trading right now today at $886, and we have a 12-month price target of $1,550 Canadian.
Okay.
U.S.
Okay. Sorry, what was that target U.S.?
1,550.
1,000, and the stock around 885 US today. And finally, Constellation Software.
You know what, Andy? I've been looking forward to actually talking about this, but we've never had an opportunity to actually buy into it. So Constellation Software, run by Mark Leonard and his team, fantastic management team, currently trading around, this is symbol CSU, and it's currently trading at about 2,190. We have a 12-month price target of $2,665. So what they do is that they acquire software startups. Now, I mentioned before about software that it's dangerous, but they have a fantastic setup of 6 operating software business segments that are servicing various sort of end users, one for financial, another one for public side, another one for the hospitality and construction side, another one for the industrials, one into the real estate, and then another one separately for overseas operations. So they have the beauty of Constellation software is that they have that diversification that actually protects it. The company has had a 10-year return on invested capital, 32%. So waiting for a chance to actually talk about them. I think it's a great Canadian story.
Kim, let's leave it there. We'll have a look at the quick look at the markets. Kim, thank you very much indeed. Kim Bolton of Black Swan Dexteritas. We've seen generally strength for the U.S. markets today. Alphabet surging after it announced a 20-for-1 stock split. PayPal, though, Kim talked about this, PayPal disappointing investors. Let's have a quick look at the TSX. Oil has been wobbling. Earlier, it did hit new 7-year highs, but our TSX, then it fell, but the TSX hanging in today, a gain of 1/3 Thanks very much indeed for watching Market Call. We'll be back at the same time tomorrow.